Good morning, good evening, good afternoon, traders around the world. This is Phil V at Trading Capital Markets, and today I just want to do a little quick post New York session review because I wasn't there to trade it, but I saw what it was doing in the moment. I wasn't able to actually put in some positions because I was occupied with a friend, but I would like to go over what it did and how we could have possibly capitalized on the scenario that it had delivered. All right, so let me show you guys over here. After taking Friday, July 18th sell side liquidity over here, I had accumulated some positions. Okay, so I started one here, one here, one here, one here, one here, one here, and sold it for a 70 point profit over here. Okay. Uh, and the only reason why I entered this trade is because we took the liquidity. So let me show you guys like that. You see the windows on the bottom? Those are specific windows. So yeah, this is where I'd like to see where liquidity is taken in these specific time windows, which are called macros. If you guys have followed Michael J. Huddleston, you would know. And then we had this low over here. A possible target would have been this low, but I didn't think it would get it. But we did reach this low over here before this big move. All right. So that being said, once we took this low, I started accumulating positions because we took that low at this specific time window. And now today, uh, a similar thing occurred where we had these relative equal lows over here that were left untouched, and the price was starting to settle above Friday's sell side. All right. Not only that, this is a daily fair value gap that we had dipped into. So let me go back on the daily and show you guys. Daily fair value gap. Let's take the fair value gap. Let's bring it up front. Okay. Over here, over here. Let's zoom in. Okay. So we had this daily fair value gap over here. Boom. See that? We had dipped into this daily fair value gap, and I'll leave it there. Yeah, I'll put it right here. Like that when we go back into the day FVG. It's a gap in fair value where price didn't come back and rebalance to the top of this wick for the sellers. So there's an imbalance of buyers. We go back in on the 1 minute time frame and you'll see why I started entering at the same time. Okay, over here. So we dipped into this daily fair value gap. We were reacting below this consequent encroachment, the halfway mark of that daily fair value gap, and then we were touching it again, accumulating and going higher from there. You see? So on today's open, remember that window that I was talking to you guys about? Guess what happened once again? So in this window, all right, we took these relative equal lows. All right, and right out of that window, over here, we created a market structure shift. So right there and right here. Let me show you what happened. So in the first 30-minute window we had from 9:45 to 10:15, we took these relative equal lows. So that's where I would have started to accumulate some positions. If it wouldn't have happened in one of these windows, I wouldn't have touched it. So that being said, we took the sell side liquidity, which is the relative equal low, and we started changing directions. All right. So let me show you the market structure. Like here. All right. Here. here. Oops, sorry, it's okay. To there, to here, to there, and to here, because this candle's body closed below. Here it's only wicks, but this candle's body closed below this low over here that was created. After that, right there, taking the low, guess what? We started changing. I like the bodies taking the highs and the lows, like closing above or below. So therefore, I wouldn't have taken this retracement. All right, I would have taken this retracement. So right here, from here, the bodies that actually closed above is this one. We have a swing point. Respected this low because it changed market structure. Created this new high because that's the swing point. So a lower high on the left, lower high on the right. Came back down and continued in that direction all the way till here. And this is the candle that extends this low to this high because this is the high and this is the last swing point that we had. All right. So from there to there, respected this low when it did the retracement and continue higher from there. Boom. Now, entries. Let's look for entries, right? After taking this relative equal low, let me just take off, oops, sorry, a little backpedal over here. Let me take off the market structure that I have done for you guys. Okay, let me leave it there. If you guys want to study it or take screenshots of this, if not, that's all right. All right, let's take it off. This one and this one. Now, as far as entries go, right when we took this relative equal low over here, 1, 2, they're relatively equal, these two lows. It's like a double bottom, whatever, for retail traders. After taking that double bottom, a relative equal low, we had created a fair value gap in that direction. All right, created a fair value gap in that direction. Let me just take off the daily fair value gap. It's going to be easier for us to see. So we had created a fair value gap to the downside, which is normally this color. But since this fair value gap got passed straight through, this becomes an inversion fair value gap. All right. So this becomes an inversion fair value gap and is used as support. All right. So that fair value gap is used as support. And then we have this bullish fair value gap combined with a bearish bearish inversion. So we have both of them combined here, creating some nice support. These candles didn't break these lows, which just confirmed when it went above here that it's a continuation in market structure. Yes, it might be deep in discount, but it did not pass the initial point. Okay, where I like to usually enter positions is at the 618 to 786. So right in here we would have been entering positions, but when I would have seen it, to be fair, where I would have entered a position would have been here, right here. When this candle dipped back into this bullish fair value gap, the gray one, not the inversion. But I could have also gotten into the beginning of the inversion. So let's say one position here, one position here, right? That's where I would have gotten in, put in my stop loss. So one here, if one there and if one there and one is here, let's put it midpoint between. So um that would be the entry, and this would be the first target. So we have first target over here. Okay. Since you have two positions, since you would have two positions, The first target would be there, okay? And the second target would be these relative equal highs. So right here is first, so this is buy side in blue. Second buy side over here, and third buy side would have been a final stop if you had more than 2 positions, right? So this would have been the final stop, but these are the two most reasonable places where you could have take profits. So one there and one here. Let's put it right here. One there and one over here. With a stop loss over here. And this also the stop loss over here. So on this one we had a 1.67 to 1. And on this one we had almost a 3 to 1. Oh wait, let's put it exactly on the line and we'll see. So this one a 2.961. But it's not exactly at the same place there. It doesn't matter. So that's where I would have entered and where my stop loss would have been. After that, if let's say you missed those initial positions for entering, right? Those initial places. So after, let me just take this off and leave those little windows of opportunity. Okay. So after taking uh, those positions, let's say you missed those and you want to go in on this retracement, a possible area to enter would have been this inversion fair value gap because it hadn't been really used after taking this high. So first spot would be here. You see that? So this is an inversion and it's inverted because we went straight through it. So it's going to be used as support when it comes back. All right. And second of all, let's see what else we can find. Maybe if we change a time frame. Sorry. Change in time frame would have been here. Let me take these off like that. We could see clearly where the lines are. Right in here. And you see how every candle, so on the 5-minute, boom, there. Wait. Let's see if there's a no, there's a volume imbalance, but let's see if this wick goes below the 50% mark. It does not, so it uses the whole thing. Okay, this is a bullish fair value gap. Didn't get crossed or closed below straight through, and you see how every candle is just doing damage, going down, 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 but the bodies tell the story. So the bodies tell above, stay above, sorry, the top half of this bullish fair value gap, and the expansion move continues all the way to the final stop and our second stop. All right. So that's a pretty good trade. Also, sorry, let's go back. Also, another way you could have entered this trade or this move, this position, would be Fibonacci's, right? So let's go back into the 1 minute and let me show you guys the Fibonacci's and how you could have entered these positions. Over here is probably the 618 retracement. So let's put it over here. Let's take it from this position because this already did the retracement. So we're not going to pull a fib from this one because it had already been retraced to 1 to 1. Okay, you see, as I was saying, the 618 retracement was used as support to continue an expansion higher. And we also have candles that closed above these highs right here. You see that? The close of the bullish candle above these highs. So yes, it was still a bullish move. And you could have used either this fair value gap, okay, sorry, this 618 retracement on the Fibonacci, or or you could have used this bullish fair value gap over here on that retracement. and body still closed above. Okay. Typically what I like to do is put the the stop loss at the bottom of the initiating candle of the fair value gap. So for fair value gap, it takes 3 candles, 1, 2, and 3. So the middle candle has to have a emptiness between the first high and the third candle's low. So the emptiness is being not being retraced to filling this void. So let's say you would have entered there, and those are my requirements. Entered over here. Okay. Target was these highs, because who knows, maybe you wouldn't have gotten to those highs. And the stop loss would have been at the initiating candle. So 1, 2, and 3. This was a risk reward of 3.73 to 1. Wait, let me adjust it to here. 3.92 to 1. Okay. And that was a pretty explosive move to the upside. But that's not where we would have entered, right? Because we were looking at the retracement of the big move. So we would have entered right here, right? Here, let's put it over here and just bring it to the right. So we would have entered right here and targeted these highs. These highs, yep, targeted those highs. I know it's a big R, it's a 7, but if you were betting on the continuation of that bullish move, those highs would have been the place to go. And that's a pretty good move, by the way. Pretty good move. 93, a 93, almost 94 points. So this is today's review, post-market review of New York session, right? I hope you guys enjoyed. I love doing these. I actually like it a lot. I hope you guys like it too. And yeah, leave me a comment. Leave me something to improve or anything that's helpful. And if you don't like the video, voice your concerns and I'll try and adjust. So on that note, thank you everybody for watching. I hope you had a great time, you learned something, and catch you on the flip side. Ciao, traders.